Welcome back to the beat of the city, the pulse of the streets, your go-to source for everything real estate that's hidden in plain sight. I'm your host, Joshua Jean-Baptiste, ready to guide you through the opportunities and the insights that await in the world of real estate. On today's show, we're slicing through the noise with the precision of a DJ laying down cuts. We are going over the top 5 rookie mistakes that a new real estate investor might experience on their journey. We're also going to go over the top 4 new home tech trends that we saw in CES last month. And to start us off, we are going to delve into the numbers from the most recent market stats update from January 2024. So we'll go through all that. Like I said, there's a lot of noise. We're going to digest the data and the numbers to present to you what's really happening in the Toronto real estate market and in some of the under-the-radar neighborhoods that we target on this channel. So buckle up. Let's jump right into this. So the numbers from January 2024, the first month of 2024, brought us some really interesting numbers. The market is experiencing some tighter market conditions. The market conditions are tighter than they have been for the past few months, but some of the more advanced metrics might show that the market is still, in my opinion, in a buyer's market territory. Buyer's market territory meaning that buyers have the upper hand right now in the market when it comes to negotiating price. There's still a lot of supply on the market, so things kind of favor buyers in this marketplace. Now, that has changed a little bit over the last few months, which we're going to get into in just one second. So let's go over the numbers for the overall market in the city of Toronto. These are the numbers you've seen all over the place, but let's go over them right now so it kind of gives us some context when we kind of delve into the nitty-gritty of the Toronto real estate market. So for sales, we started off the month with 4,223 sales for the month of January, which is a 37% change over the amount of sales we saw in January of last year, which was 3,083 sales in January. Now, last year, January inventory was quite a bit lower, so there just wasn't a lot. There weren't a lot of homes for people to buy last January. It was just a tighter market on the listing side. So when we talk about listings, new listings were up 6.1%. Active listings were also up 8.5%. Now, these are key metrics. When we hear the Toronto Real Estate Board and some of the media say how things have gotten tighter, yes, they've gotten tighter, but they're based on the amount of listings that we have on the market. It's not as tight as they would make it appear to be. So that then leads us to price. Average price was actually down over last year by about 1%. Now, these are the average numbers for the overall GTA. Later, we are going to talk about the HPI, which is the seasonally adjusted numbers. Those numbers kind of reflect about the same as well. And then we look at days on market. We're sitting at about 37 days. It takes about 37 days for the average listing to sell, and the average property days on market, which includes when properties are listed, terminated, and then relisted again. So we're looking at the overall average time about 54 days for a property to sell in the GTA. So let's get into those City of Toronto numbers specifically. Sales numbers are a little bit different, right? We are looking at sales of detached houses year over year up 7.5%, semis up 26%, townhouses up 42%, and condos up 46% over last year. So a lot more condos are selling this year than last year, actually almost 50% change in the amount of condo sales this year versus last year. Now, with the added sales, it hasn't really affected price because condo prices are fairly flat. They are up 0.1% year over year. So while we're seeing more sales, there's a lot more inventory in condos. So it's just people snapping up some of that inventory that has been stagnating on the market on the condo side. We go through the prices. So detached prices are up 5.7% over last year. Semis up 4.3%. Townhouses down 8.8% over last year. Right. So those are all the macro numbers for the city of Toronto. If you follow our podcast, you follow our market updates, we like to look at some of the more advanced metrics to get a read on where the market's at right now and where it's likely headed as we move further into 2024. So if you watch, you know the numbers we like to talk about: MOI, months of inventory, and then SNLR, sales to new listings ratio. So these two metrics give us a good read on where the market's at right now and where it's likely headed. So these two metrics kind of give you a gauge of whether we're in a buyer's market, a balanced market, or a seller's market. So when we look at those numbers for the overall city of Toronto, we are going to look specifically just at the city of Toronto for these numbers. Months of inventory is sitting at about 2.7 right now. So again, for those who haven't watched before, it would take about 2.7 months to sell off all of the inventory we currently have right now on the market in the city of Toronto. A balanced market is at 2.5. So right now we are still leaning a little bit in towards a buyer's market, because at 2.5 months is kind of like the bellwether for balanced. We're slightly above that. So what that means is that if we do see a bit of an influx of inventory hitting into the spring, we are firmly going to be in a buyer's market. However, if listing inventory pulls back, we are then going to drift back into a seller's market. It'll lead to tighter conditions, and which will more than likely lead to some upwards pressure on price. Now, when we look at the other advanced metric of sales to new listings ratio, we're sitting at about 45%. Balanced market is at 50. So again, this metric is also pointing us more towards a buyer's market. When we looked at busy markets from the past, especially back in like 2021, for example, we were seeing sales to new listings ratio up in the 70% plus range. So that means 70+% of those new listings that were hitting the market were selling within that given period of time. Right now we're at 45%, so below that 50% threshold of listings selling. So again, when we look at both of these two metrics, combine them together, some could maybe argue we're in a balanced market. Not to be pessimistic, I'm kind of leaning more towards we're still slightly in a buyer's market. Some of these numbers are also driven by the condo inventory that's on the market. There's some people who have been looking for houses, especially some of my clients that are looking specifically for freehold homes. They would probably be screaming at me, "Hey Josh, you haven't been sending me many listings recently." And that's true. On the freehold side, we are probably more towards a balanced, maybe slightly seller's market. However, from a macro perspective, we are in a buyer's market. So then when we break it down and we look at some of the different sectors of the city, you're going to get a better understanding of kind of where things are at overall. So if we look at the east versus west versus central neighborhoods of Toronto, in the east end, we are seeing things very much in seller's market territory. Their months of inventory is sitting at about 1.8 months. Sales to new listings ratio, it's almost a mouthful, is sitting at 52%. When we look at the west end, months of inventory, now my west end's a lot more balanced. They're sitting right at 2.5 months of inventory. Sales to new listings ratio is at 47%. Now, when we look at the central zone, so right up in the middle of the city, months of inventory is sitting at 3.2 months, so very much buyer's market territory. Sales to new listings ratio, 41%, so only 41% of new listings are selling. So those numbers are likely getting influenced by the condo market. The condo market is very, very well supplied right now. There is a massive opportunity for buyers looking for a condo right now in the city of Toronto. So if I were to have a crystal ball, based on the sales numbers we saw from last month, again, condos were up 46% in the number of sales versus how well the market is currently supplied. I think we actually probably have a finite amount of time based on also where the sale, like the average price is at versus some of the peaks we've seen. we have a finite amount of time for this buyer's market, for this current condo buyer's market. I think we probably have maybe 3, it could stretch out to 6 months of this kind of depressed condo market, because as soon as rates start to drop, we are likely going to see many more buyers enter the market, start to put some of that upwards pressure on price. That's it for the overall macro numbers in the city of Toronto. You are watching the Under the Radar Real Estate Podcast. A lot of you want to get into the numbers from the Under the Radar neighborhoods that we track month over month since we started this YouTube channel. So let's get into those numbers. So when we look at the neighborhoods of CO3, W03, and W04, which are the 3 under the radar neighborhoods that we like to target on this channel, let's just dive right into the overall sales numbers. CO3, we saw an average price of these are, again, before I get into it, these are the HPI numbers. I personally like to look at the HPI, which are the composite numbers, which again are the seasonally adjusted numbers. The numbers that we talked about before, those were the overall average. I like to look at the more accurate seasonally adjusted numbers. So actually, let me back up 1 second. For the seasonally adjusted numbers for the city of Toronto, we are sitting at about 1,050,000. Which represents about a 1.17% decrease over last year. When we look at CO3, we are sitting at 1.567 million in CO3. So some of you, whenever I bring up CO3, I'm sure some of you are screaming like, that doesn't really seem that under the radar. So CO3, it's a neighborhood, central Toronto, dominated by detached homes, right? So the price point is going to be a little bit higher. The reason why it's an under the radar neighborhood, for those of you who are new to this channel, it sits right next to Forest Hill and Lawrence Park, which are some of the priciest neighborhoods in the city of Toronto, some of the priciest neighborhoods in Canada. So when we look at CO3 versus CO4, just to the north, separated by a street. So CO3 is on the south side of Eglinton, CO4 is on the north side of Eglinton. When we get into CO4, the average price of a home in CO4 is $2.1 million. So CO3 is 25% less expensive than CO4. That screams under the radar to me. So if you are looking for that kind of entry-level luxury product, CO3 is the most underrated neighborhood in Canada, maybe North America, for your entry-level luxury real estate. Now, let's move on to our other 2 neighborhoods that we like to target on this channel, W03 and W04. So W03 and W04 kind of encapsulate that Eglinton West through to Weston corridor. The neighborhoods that we talk about all the time as being the next neighborhoods that are going to see a massive surge in value in the years to come. And its number one driver is transit. Once the new subway opens along the Eglinton line, these neighborhoods are going to explode with growth. So when we look at the numbers right now, though, there is massive opportunity. So the average in W03 is 941,000 versus the average in the city of Toronto at, again, just over $1 million and $1,050,000. It represents a 10% discount over the overall city of Toronto. In W04, which kind of pushes us a little bit further north, Weston, Briar Hill, some of these neighborhoods, we're looking at $877,000 as an average, which is 16% below the overall average of the city of Toronto. That is just screaming opportunity. Those of you watching this right now, give us a call. Or you can send us an email, hello@realestateundertheradar.com. We'd be more than happy to speak with you if you're interested in buying one of these 3 neighborhoods, because again, the opportunity is now. We have a window. I mean, hopefully it's only 6 to 7 months when this subway opens. Those of you who live in Toronto know the pain of this subway line, but once it opens, a lot of you will likely FOMO into this neighborhood, realizing, oh snap, it is now well served by rapid transit. I can get downtown in less than 20 minutes. So get it now before that happens and you won't experience that FOMO. Right, so now that we have a good understanding of where the current market numbers are at, let's jump into our second segment, property investing. A lot of you who are active on social media are probably seeing this story about these social media famous property investors that I guess over the course of the pandemic had done really well with purchasing properties and becoming landlords and renting them out and giving all this questionable advice about how to invest in properties. They were making videos out of Miami. They were on yachts. They were supposedly advising athletes and celebrities on real estate purchases. However, it has just come out that some of these property investment gurus, influencers, are now in some serious trouble and they're facing bankruptcy. Some of you maybe come across my content because you're looking to invest in real estate. And real estate investment is a wise investment. However, like any investment, you have to do your due diligence and you have to understand what you're getting yourself into. It's not as simple as some of these real estate gurus on TikTok and Instagram make it seem. So I came up with a top 5 of some of the things that we like to speak to our either rookie investors or even some of our investors who just kind of need a brush up on what to look for. So the 5th on our list would be market research and location. And it's super important to understand the market you are investing in. Get information and understand the market dynamics of that neighborhood. And really get an understanding of where the rental numbers are at, what the demographics are like, what type of projections we see in terms of value going forward, where the major infrastructure investments are in those areas, cities or neighborhoods, where the schools are, where the new employment may be, if there's major employers that are shutting down that could impact your rental numbers or your resale numbers in the future. You want to work with local experts who have that market research already completed because they work in those neighborhoods. They work, live, play in those neighborhoods. They have a much better understanding of those places. So our number 5 is really getting that market research done yourselves or working with a professional who truly understands those neighborhoods. So number 4 on our list is financial preparedness. So having your money ready, having your credit checked, having all of these things in place prior to you really going out and exploring if real estate investment is for you. Having a good credit score is key to be able to get a loan. Unless if you're coming in cash rich and you have the money to splash down in cash, most, especially newbie rookie investors, are coming in and are likely going to take a loan. And I mean, even if you do have a lot of money, leverage that money. Don't put it all in one spot. So for leverage to take a loan, you have to have good credit. Go get a pre-approval. Talk to a financial advisor. See where your credit's at right now. If you have bad credit right now, that's also not terrible. Financial planners, some even mortgage brokers will give you steps to help you improve your credit so that perhaps even if you have the cash right now, you can take steps over the next 3, 6, 12 months to improve that credit, to get that loan, to hopefully put you in a position where you can now take out a mortgage and get started on your investment journey. You also have to be wary of the tax man, right? So depending on what type of investments you are doing in real estate, if you have to look at things like capital gains, will the government view the proceeds of your investment as income versus capital gains? So that now leads us to step number 3, your investment strategy. Once you have your money invested into real estate, you have to understand your strategy for managing whatever property you've invested in. Real estate is not passive. It is the opposite of a passive investment. It's very much an active investment. So you have to have a strategy. Are you going to leverage technology to manage your real estate? Are you going to reach out to property management firms to manage that real estate? Do you have a retired family member who could help you with managing the real estate? in my opinion, where we're headed with technology, there's a lot of different pieces of technology now that will do a lot of the management, especially when it comes to bookkeeping, collecting rent, doing tenant screening. All of that kind of stuff can now be done with technology. So it'd be very important to do your research and figure out what type of strategy you're going to employ to manage that investment, because the last thing you want is for that money that you sunk into something to be lost because you haven't strategized that investment. So number 2 on our list kind of ties in a little bit to number 4, understanding your financing options. So once you've decided to purchase a property, how are you going to pay for it? There's a lot of interesting ways that you can invest in real estate that aren't necessarily buying a property, putting a mortgage on it, and collecting rent. There are other ways to invest into real estate. There's crowdfunding like partnerships. It's important to seek out information from professionals, people in your network, your bank, your financial advisors, mortgage brokers. That give you all of the different options available to get your money invested into real estate. Not everyone's situation is exactly the same. So number 1 on our list is risk management. This is the number 1 thing that both rookie property investors and some veteran property investors need to be aware of when they're looking to purchase real estate as an investment. You have to have clear and specific goals about what you want to achieve with your real estate investment. Is it a short-term buy, renovate, and flip? Are you looking specifically at gaining rental income? Is it a long-term purchase where you're just looking at the eventual return on your investment, where you're not necessarily looking at your month-to-month rental income, you're just looking at property appreciation year over year? You have to understand your goals going into the purchase so you can manage the risk. Obviously, the shorter term, in my experience, and most people will likely agree, is that the shorter term goals are generally some of the riskier investments in real estate. So property flipping on HGTV and social media can seem very attractive. You can make a lot of money in a short period of time. It is, in my opinion, the riskiest form of property and real estate investment. You're putting in a lot of money and you're hoping to recoup your investment in a short period of time. So make sure you're managing risk when you're going in, understanding all the different forms of real estate investment, speaking to professionals, speaking to realtors, mortgage brokers, financial planners, and getting understanding of the different risk factors and the different types of real estate investments. So then ultimately setting your goal is the key to unlocking the real estate market. Now that we're equipped with that investment knowledge, let's look at how some of the new prop tech innovations from CES is going to completely transform real estate and perhaps even help you with some of that property investment. So let's jump right into it. Our top 4 takeaways from the CES show that happened last month. So CES is the Consumer Electronics Show. Happens every year. All the big electronics companies show their wares. Some of the newest electric cars, new phones, new TVs, new video game systems, all that kind of stuff. This is a real estate channel, and there's a lot of cool home tech or real estate focused technology that we want to highlight from the show. Let's get into number 4, which is air quality technology. So we just came out of COVID, and one of the big takeaways from COVID is that a lot of homes and buildings have very poor air quality. So the one piece of tech that we saw was a new bathroom vent called the Atmo. So if you live in a house with bathroom vents, you know that they can be loud and they're usually ugly, and they can make a big racket. This new fan by Kohler called the Atmo will automatically turn on and off when it detects certain levels of humidity, which is great, right? I mean, one of the biggest enemies in most homes and condos is humidity. Humidity breeds mold and it creates damage to flooring and walls and furniture. So while we ensure that the air that we breathe is healthy in our homes, number 3 on our list was this really cool piece of tech that was called charged up counters. So what the heck does a charged up counter mean? Well, with most of our new devices, whether it be our AirPods or our phone or even now some new tablets, wireless charging is all the rage. Now, we're seeing some kitchen counter companies install the wireless charging technology right into their counters. So immediately, the one cool thing is that you can come home from work, put our phones down on the counter will actually charge your phone. Another cool application though with these charged up counters is that now small appliance manufacturers can now take advantage of this technology as well. Like, how annoying is it if you store, let's say, your toaster in the cupboard or your mixer or any other electronic device, and then you have to find somewhere to plug it in, unplug your coffee maker or unplug whatever you have already plugged in, plug something else in, all these cables everywhere. It's a hideous mess. What now if a lot of these small appliances, they no longer have to have plugs anymore? You just pop your toaster down on your charged up counter. It uses the induction method to now charge itself or power itself on. And then when you remove the toaster, it turns off and you put it away back into your cupboard. And once it's cooled down, obviously, we don't want to start fires. But again, really cool piece of tech, getting rid of some of those wires that we see all over kitchen counters. So that's a really cool piece of tech coming in number 3 on our list that we would love to see and hopefully gets adopted, because I would love to have a kitchen with a whole bunch of appliances that don't need to be plugged in everywhere. So then that brings us into number 2 on our list that kind of ties in a little bit to our last one, are downsized appliances. Gone are the days, in my opinion, where we need supersized everything, especially as more of us start to move into cities and move into more minimalistic lifestyles. We don't need massive refrigerators. A lot of us don't even really cook that much anymore. We don't need huge stoves, all these kinds of things. So what we're seeing at CES this year are a lot of now downsized appliances. So both LG and Bosch, and I think Samsung, have introduced a whole line of these new combo all-in-one washer and dryers. And I know a lot of you are already saying, hey, I've used those devices, they're brutal, it takes forever to dry, and it does. However, they've improved the technology a ton. So these new washer dryers, not only are they smaller and they're all in one, so they don't take up a lot of space in your house or apartment, they also take 60% less energy than a traditional laundry pair. So you're saving a ton of energy, less water, less electricity. They now are a lot more efficient because they use heat pump technology and AI to kind of sense if something is either washed enough or dry enough. All right. Now this leads us into our number 1 piece of consumer tech. It's not new. However, it's the most important piece of consumer tech that we saw at CES, and is electric vehicles and car chargers. Why is this number 1? I mean, it's likely going to be number 1 for many more years because it's probably the most important piece of consumer tech out there. Many governments around the world are switching to EVs and pushing policies where people have to get away from ICE vehicles, internal combustion engine vehicles, ICE, and moving into EVs, electric vehicles. So with this change and eventual swap over, this tech becomes so important to those of us who own properties or are looking to rent properties, because now when you own a property, you're going to have a space where you can plug your car into charge. Or if you rent a property, you're going to have to be looking for buildings that offer you the charging capacity for your car. So car chargers are going to be, in my opinion, the number 1 most important piece of tech for those that translates directly to real estate, because we're going to see any houses or condominiums that have a charger in their parking spot are going to command a massive premium over those who do not. Because, that means if you don't have a place to charge your car, that means you're going to public charging stations all over the city. And with more and more people getting into EVs, those charging stations become busy. Just last year, I was in Orlando, I rented a Tesla, and I thought, oh great, there's Tesla chargers all over Orlando. And there are. The problem is there's also a lot of people who own Teslas in Orlando or people who rent Teslas in Orlando. So every time I went to a supercharger station, there was a whole bunch of people charging. And if you have an electric car, more people charging means the slower the charge, right? So sometimes you're sitting there for a couple of hours waiting for your car to charge when empty charging station usually here in somewhere in GTA, you can plug it in within 20, 30 minutes, you have a decent charge. Anyway, the whole point of this is that if there was a charger, let's say at the hotel I was staying at, I could just plug it overnight and I don't even care how long it takes, right? And the same thing applies to your home, right? If you have a charger at home, you don't necessarily need a level 3 charger that'll charge you in 20 minutes. You can have a level 2, charge it overnight, and you're good to go. So that is the number one piece of consumer tech from CES that we think is going to be the most impactful within real estate going forward from 2024 on. All right, so that's it for our show today. Thanks for watching. There's a lot of cool new tech coming from CES that's really going to impact the real estate industry and your kind of day-to-day life as a human living in a home. We went over our top 5 investment advice that we have for rookie investors or even just veteran investors out there who just need a bit of a brush up. So these are the top 5 things we discuss with some of our investors when they're looking to invest in real estate. And then we also went over the market trends, both in the city of Toronto and the under-the-radar neighborhoods, which actually kind of ties in well to some of that investment advice. So if you're looking to buy, sell, or even rent in some of those under-the-radar neighborhoods or anywhere in the city of Toronto, we would be more than happy to be your real estate resource for any of that. So thanks for watching. Don't forget to like and subscribe if you like this podcast or if you like any of our content. It really helps us out. We want to get the word out to more people to really start paying attention to some of the hidden gems and less talked about things within real estate. So it really help us out a lot if you liked, subscribed, also commented. If you have any comments on the overall market, where things are going in some of the under-the-radar neighborhoods, how they compare to Toronto, if you're interested in some of these neighborhoods, if there's anything else you'd want us to cover, whether it be in those neighborhoods or in the city of Toronto. If you're looking to invest in property, comment away. If you like any of those pieces of tech from CES, or if there's any pieces of tech from CES that you saw, please comment down below. All right, so that's it. That's our show. So remember, in real estate as in life, the next big thing might just be where you least expect it. Peace out.